Yo, and welcome to another episode of ROIS Podcast. I'm ROIS Podcast.
And I'm John Rodriguez, and this is ROIS Podcast. And today we have a very special guest. We have the CEO of Friktion on ROIS Podcast today. So how's it going, Uddhav?
Hey guys, it's going good. Just an exciting week ahead. Excited to be here. Thanks y'all for reaching out. Happy to hear you guys are Friktion users.
Oh yeah, we're huge fans. Our community loves it. It was one of the first DApps that I actually started using when I kind of started using Solana. Yeah, it was. I found it on Slope. I was using the Slope wallet, and I saw it and I clicked it, and then it just seems so effortless in a way. You know what I mean? Where smooth, you just put it in. Nothing you can do. You have to wait for the epoch to end. But so let's get into this. We got definitely a lot of questions that we want to ask you. Roy, do you want to start it off?
Yeah. So for people that are kind of unfamiliar to the topic and Friktion itself, what would you describe Friktion as, and what is the goal of it?
So Friktion looks. Our aim really is to make risk and portfolio management in DeFi simple, and that it's kind of a lot of words, but to unpack that a bit, what it means is we look to offer a set of strategies or create a set of strategies called vaults that allow anyone to build a portfolio. Portfolio is just a combination or an aggregation of assets and exposures that can survive and outperform and just generally perform across market cycles. So what that means is there should be a strategy where as the market's going up, you're able to participate in some upside. As market's going down, you're able to generate some yield or return on some of your underlying assets. And as market's moving sideways, you should be able to generate some return. So this is something we think is really powerful for kind of the next wave of DeFi adoption, because so far we've seen a couple of things in DeFi. We've seen liquidity provisioning as a big funnel for people coming into crypto to put money into automated market makers, coming to DeFi, putting money into automated market makers, earning transaction fees, as well as native governance token rewards. That got a lot of people excited in summer of 2020 as DeFi summer kicked off. And we think a next wave of activity and user participation in DeFi comes through these products that really take advantage of the risk properties of an asset in order to generate yield.
You run mainly on Solana. Why did you go ahead to choose Solana as your main place to start your project?
Been active users, builders across various ecosystems, notably EVM things. I think one thing that we noticed off the bat, coming from a trading background, a lot of our team really appreciated, I think, the kind of the low-level engineering design behind Solana. So the concept of parallel processing and the C-level runtime, which uniquely Solana offers, it makes things look a lot like high-frequency trading systems. Another thing that was really exciting was Serum. Serum, or Project Serum, is a order book primitive that allows people to create very easily and efficiently markets. These markets have bids and offers, and since essentially a marketplace like that is important to create any sort of asset, we found that the existence of Serum made it a lot easier to build on a place like Solana. And the community was quite young, still really kind of nascent when we launched, and it's been a lot of fun in the growth.
Just to break it down even more for our audience, what would you say we use or we run Serum for?
Yeah, so whenever we create, let's say you're a user of Friktion's first vault, so you deposited SOL. When this SOL gets deployed in an epoch, or the beginning of an epoch, there's a market on Serum created. And on that market makers or bidders can bid for the options being sold using a Serum order book. And because of the existence of the order book, it's very easy to run very efficient request for quote style auctions. Essentially, this means we're running a gradual blind Dutch auction. So to unpack that a little bit, you see bids from, let's say, $1 to $5, and they have different amounts of size associated with them. So when the auction happens, the bids are hit from the top down to fill the amount of volume that the vault has deposited in it, or the amount of size, number of SOL deposited in it. So Serum makes a very useful primitive to be able to run this in an efficient and lean manner.
What was that light bulb moment where you were like, oh, this would be awesome. This would be a great thing for Solana?
That's a good question. I think one of the things that inspired us was just the idea that risk management doesn't really exist in DeFi. And by that, what I mean is when you deploy $1 into when a user deploys $1 into an average DeFi protocol, they tend to not know the risks associated with what's happening, right? So if you deploy into an AMM, most users don't understand what the concept of impermanent loss or adverse selection or opportunity cost is, right? Because to them, they're seeing an APY and they're making a decision based on that. So for us, the main idea was how can we find sources of sustainable yield that aren't driven by emissions or interest rates and really are driven by like the risk properties of an asset, right? Options are driven by the implied volatility, which is a measure of what the market views the forward volatility to be, the future volatility to be. So we wanted to find assets like this, find assets like options and power perps and kind of market neutral basis strategies to help people generate returns. Because when the bear market hits, you see a lot of protocols have a massive like flee of capital. But for us, something we've focused on is like, how can we have strategies where people can perform in bear markets?
Yeah, and one thing I just want to call attention to, and if I might be able to share my screen real quick, is just like how clean this platform looks. When you go on here, you can dive in, and they make it so easy to understand. They'll tell you best in moderately bull markets. Like, I wish that this was stuff that they would tell you. Like, anybody can kind of make a prediction, or I guess because it's up to the person at the end of the day. But they make it so easy to understand what, range bound. If it's going to stay between a certain price, and they'll even list out some of the prices here. And so I just wanted to give a shout out to you guys' website. Say you guys have done such an amazing job with this.
I really appreciate that. I mean, we have a new UI coming out soon too. So that's definitely one thing to keep a lookout for. So it's a new redesign of the website. So it's going to have a light mode. It's going to be really friendly. I think you guys are pretty experienced DeFi users, and your community's probably pretty experienced DeFi users. But to onboard kind of right now, there's only like 10, maybe 10 million active users, probably way less on Solana for DeFi, right? And just generally, and most of them are probably using NFTs or trying to trade NFTs. But to get the next wave of people on, we really wanted to redesign the website to make it friendly and not necessarily only open to DeFi natives like us.
Right, and you talk about bringing those people in. I feel in a way that sometimes the crypto market, because people view it as so volatile, can only get so many people to get involved unless like they see some real use cases in real life and how it gets used. So I see that you guys are coming out with an NFT project that kind of does just that. Would you be able to speak to that a little bit?
Yeah, the Lightning OGs.
Is it already out? I believe it's already minted, right?
Mm-hmm. Yep. So we had so I think they launched around January. So once we were on DevNet, we opened up a collection to our power DevNet users. So really there was no like economic expectation that you were going to get this NFT. And for people who aren't familiar with DevNet, it's just a developer network that runs kind of parallel to the main network, where you can use like fake money to transact and test and kind of play around in a sandbox. And we found the feedback from those members to be great. We dropped around 2,222 out of these NFTs to these members, and now we have a set of fantastic OGs that we call the NFT Lightning OGs. So if you do hold one or you don't hold one, you can go to Magic Eden and find one on there, or hit up our documentation and go to the NFT section. And once you get that, you can access a couple of interesting channels in our Discord. Really, it's for like quantitative traders, active kind of DeFi power users, as well as researchers and developers. So it's a pretty exciting community. I mean, I think at the end of this, we should probably give someone in your community who has like a great comment or a great thought one of these. Would be pretty cool.
Idea. Good.
I love that. Thank you. We appreciate that. Not obviously, we're not saying we're going to take it. We just mean, for the community. And the floor price, people, if you're interested, which after this episode, hopefully you guys will understand how valuable Friktion is, for people that use it. And then also going forward, like with Discord, because I feel like Web3 has kind of caused a lot of people to start using Discord more. Really
sure.
Emphasizes community, especially on Solana. And I think that once you're in these Discords, like to have access to these private channels through the NFT is huge, especially like it's like alpha for Friktion, which is cool. You don't see that much.
Exactly. Yeah. I mean, how did you guys get into DeFi? What got you in red pilled?
So when I was probably like 4 or 5 years ago, I remember I had this was not a good mindset, but my mindset was like, well, everyone, like there's people that already are super like they know so much about the stock market, I'm to catch up to them, I'm never gonna make money. And that was like this weird mindset I had. And I was like, but I was hearing about crypto and stuff, and then that book came out, The Blockchain Revolution, and I read
Yeah.
that, and I was like, oh shit, like I like this. And so I just kept like, I would listen to audiobooks and all that stuff. And then I started trading like little amounts on Binance, not Binance.us, but before, when everyone could just use the normal Binance. And I get pissed at myself, but like, it's part of the learning experience. But like, I remember holding,
Yeah.
some coins or tokens now that at the time had like 2 decimals. And it's just
Yeah.
like, but it's a learning experience. But like
Yeah, it's part of the
yeah,
process.
and then Roy here, he was kind of the one, because up until Roy had brought up starting a podcast, I never really thought of myself as like someone that would like openly talk about like crypto and stuff, just because I didn't
Yeah.
think I was qualified to say that. But it's just like, you're providing information. It's not like I'm like trying to be a professor.
Yeah,
And
I think just building a community like you guys have and are is probably the most powerful thing you can do when you get into crypto, is like find people who are just as curious as you are, and also like you're saying, like seeking different forms of alpha or market insights or finding other communities, because that's the type of stuff that gets you to a place where maybe like one day you want to be doing crypto full time,
Yeah.
and working
yeah.
either in DeFi or in NFTs or with some Web3 project. This is a fantastic way to do that.
Right, and I'm always drawn to the idea of the power of the mass is greater than the power of the individuals summed up. So really getting these people together to come and talk about, now we have a Discord where people come in and we'll share ideas, and I like the idea of a think tank, because there's millions of ways to win in the market.
Yeah.
But just because you have ideas doesn't mean that they're the one and only correct ideas, and there's a lot of people bringing stuff to the plate now. And I never really thought that this podcast would be getting this kind of people brought in. They're bringing in new ideas with NFTs, cryptos that they're looking at. My side of it is more about the stocks and technical analysis from that side, because that's just really what I loved and grew up on. But actually,
he's brilliant with the technical analysis.
I'd
love to hear a little bit about you guys.
Yeah,
I'd love to hear a little about your guys' backgrounds. Like what, and you said this is kind of some of the stuff that got you into it. Like, what was the journey like?
Like the journey of like when we started the podcast and everything.
Yeah, like starting the podcast, getting into crypto, like having people on, and then doing research too, which seems like you guys do quite a bit of.
I mean, me and Lumpycat could talk all day long on like trade and investments, and that's what we initially did. But I kind of realized that we weren't really helping anybody. We weren't getting any more ideas. It was just us kind of talking back and forth. And I wanted to open it up. And we started it right around like the peak of AMC and GME. And I was having a blast. Yeah. And it was a good time. And I've been looking at the markets quite a bit before that as well. And I grew up on the markets because that's just something that's been in my family. And so doing that and the options, so I'm pretty familiar with everything that you guys talk about with the call strategy and the put strategy and all of that, because that's stuff that I implement in my own trading as well, just on the stock side. But that was just third nature, and I figured that we could get a bunch of people involved and maybe educate some people, but also have people educate us. And so it's been a great learning experience, and it's been nice to be a part of a group doing it as well.
And I wouldn't even thought of this. I wouldn't have even thought of like, because when he first approached me about doing the podcast, because like that's kind of my thing. Like I produce podcasts for I freelance to like businesses, but then I had a funny one, like a personal one called J-Rod Pod, and it was like a comedy one. I would have like guests on, kind of bust their balls, and then and so he knew I knew how to like produce, and I thought he wanted me to help produce a podcast, like kind of a solo one of him like talking and stuff, and I was down to do that for sure. But then when he told me he wanted me in it, I was a little nervous, because I was like thinking, like I don't are you sure people are gonna want to hear from me, just because like I don't have that background that where people would be like, that's someone I want to learn from, you know what I mean?
Yeah.
But like with crypto, it's so new and everything, and if you just know the basics about crypto, you can help people. But I know a little more
Yeah.
than basics just because I've been looking at it for so long. And so then when we started the podcast, he kind of made me aware that some of the cryptos that I was calling were like performing very well, and that my record of the cryptos that I was calling was like consistent. So like, for example, Shiba
Yeah.
Inu, I just had a feeling about that one. And like, just because I remember when they first were like building their dashboard, they have like on their website, they have Bone, Leash, and Shiba. And it was the first time that a meme coin was actually going to have some sort of utility. And I was like, oh, damn, this
Yeah.
thing might do something. And then
Yeah.
like a few months later, it did. And so I was able to call that, but I wasn't holding a bunch because I thought it was a stupid coin, which I regret again, But
Yeah, market's always teaching you something. So,
dude, for real, it's always teaching you something. It's always humbling you, that's for sure.
Right. Yeah. And I guess enough about us. What got you drawn into this? What brings you into that?
Yeah, I mean, as I was saying earlier, like I came from a commodities trading background. I studied petroleum engineering and math in school, which is totally unrelated to this. But I think one of the exciting things is just I had a bunch of friends who got really into the weeds of like Ethereum and Bitcoin development back in like when I was a sophomore. They started talking to me about things, and at that time, like the crypto community wasn't super big, or I wasn't really well connected to it. And then after college, after working for a little bit, I realized that the opportunity for DeFi is just so huge. I mean, you mentioned GME and AMC. Those were classic examples of like how the use of centralized or traditional finance can inhibit scaling of financial systems, right? You can't pause markets in DeFi and true DeFi. You can't kind of have all these arbitrary restrictions. And I think it shows the power of using an actually decentralized financial system when you can access 24/7, permissionless, censorship resistant, very transparent market where you kind of know what's happening at all times, and you can trace every back to an on-chain transaction. So I think that was one moment that made me realize like DeFi can have a lot of primitives, and since 2018, the launch of Uniswap, DeFi has built so many exciting things from AMMs, lending, borrowing platforms, or money markets, liquid staking, derivatives, DOVs, DeFi option vaults, structure products, and then obviously the perpetual swap, which is a fantastically crypto native instrument that I'm sure everyone who's traded with leverage has probably used at some point. That's something that only launched, I think it was written about by Schiller in like 92, but it didn't launch till 2016 on BitMEX. And since then, like DeFi trades more, such a meaningful amount of perp volume now compared to back then, but it's still only 1% of all kind of traded volume for these assets. So I think we have a long way to go.
So you think that picks up in the future?
Yeah, I'm really bullish about the overall volume for both perps and options in the future. I think they're very young. I mean, in DeFi right now, we haven't actually found very many cross-collateralized perp trading platforms, decentralized exchanges.
What does cross-collateralized mean?
Yeah, good question. So on most exchanges, like let's say you use Binance, and you want to take leverage or put on leverage, to access that leverage, you have to have some amount of capital deposited. But most of the time, in centralized finance, any asset that you deposit can be used as collateral. It's a very powerful feature, but it's very tricky to replicate in DeFi because traditionally on a place like UIDX, which is the most popular perpetuals exchange currently, on Starkware and now moving to their own L1, their own app chain on Cosmos, you can only use USDC as a collateral type. But places like Mango on Solana, which use Serum as well, allow you to use a variety of assets as collateral to access that capital efficiency that we have in the centralized world on FTX and Binance.
Right. And that, real quick, just because you said Mango, I just want to touch on this. I noticed for Friktion, and this is something I've always kind of wondered, and I think is a good idea. Like, you guys have, like, typically the coin or token that you guys have on there is a SPL token. That's kind of the main theme. Do you do that specifically because it's chose to do that?
Interesting question. So SPL is kind of like the token standard for Solana. It means all of the same SPL token are fungible. So note that on Ethereum you have ERC20, which is a token standard, but you can also have ERC721s like NFTs, and more recently like 4626s, which are generic vault contracts. But for Solana, it's all the most popular ones are SPL tokens, and they just represent tokens that are on the Solana blockchain. So it stands for Solana Programming Library, and it makes it very interesting because you can use these SPL tokens. Like we generate an SPL token, it's called an F token, whenever a user deposits into a Friktion strategy. So like, let's say Roy uses the Sol covered call strategy. He's depositing Sol, and once the epoch starts, he's able to mint an FC Sol token. What that means, which is an SPL token, what that means is it's Friktion call Solana. That's the kind of breakdown of that token. And once he has that token, he can move that to any wallet that he wants. And the yield that strategy is generating is going to go to whatever wallet it is, because the token is what's actually accruing that value. That's one example of kind of DeFi composability. Yeah.
Put together the FC, because I've always seen it. I just never.
Yeah, the puts are like FP Sol, so you can see similar things there.
Yeah,
that makes so much sense.
It's going to be way fancier, but that's
keep it simple. Yeah,
that's great.
I think DeFi needs to keep it real simple to get people to understand. I mean, we have the crab strategy is called FCRAB BTC, so pretty easy to figure that one out.
So for our audience, when do you guys go ahead and call it the crab strategy?
Oh, I mean, so if you actually go to if you're able to share a screen and go to app.friction.fi/analytics, I can give you like an explanation. Perfect. Or I can show you kind of how we got to the idea of crab. But essentially, like, there's a classic meme that like crabs have like claws, and those claws are kind of like a range, so they kind of move in the same line to some extent. So if you go to on the left sidebar, there you go, the crab strategy for BTC. You can see there's this concept of the profit range that you were talking about earlier, Roy. That is shown in these high and low bands. So essentially, once the epoch starts, there's a profit range in which the strategy is making money. And because of the idea that this strategy makes money in range-bound or sideways markets, we thought the term crab was pretty funny, because like I think a lot of how we think about markets these days are just crabbing around. Yeah. Like since the middle of June, right? We've been moving sideways. Yeah. From after Luna in like the beginning of May till that point in June, we're moving sideways. So
yeah, and people are pretty crabby now with the market movements. So it looks like the only time that this really hasn't paid off as a strategy would be here. Kind of, this would have been a perfect time to own, and maybe here a little bit. But other than that,
yeah. So the two big times are like when Luna crashed, and in kind of early June, and you can also see the weekly performance at the bottom of this page. So it breaks down kind of the return that you earn every epoch.
So what is it? So, how would I read this?
Yeah, let's run through it. So if we look at this in sync with kind of something with the chart above, you can see that at the start of an epoch, we list the price of spot like BTC, so just the price of Bitcoin at that time, and the price collected. So what the strategy is doing, just to recap, it's selling a BTC squared perpetual. And what that means is it's tracking the price of Bitcoin squared. And a very interesting property about tracking power perpetuals is that, unlike a normal perpetual where your payoff is 1 plus R, where R is the percentage return of the perpetual in some time period, the payoff of this is 1 plus R squared.
Yes.
So to wrap our heads around that a little bit more and like kind of dive back into a little bit of math, 1 plus R squared expands to R squared plus 2R plus 1. Right. So now let's just zoom into the 2R term real quick first. So that 2R term is just you're exposed to twice the movement of price, twice that return, daily return. Let's take that as the time window. But then the R squared term is where it gets really interesting, because now you're exposed to the square of the price, right? And that you can think about like variance. And if you think about variance, it just takes square root to get volatility. And volatility is the largest driver behind the price of an option, as you surely know, right? And this gives you access to what in options world you would call a convex product, or in this case, it's constant gamma, meaning the rate of change of price that you're exposed to is constant at 2, because gamma is just the derivative of R squared. If that all was a quick lesson in the strategy, to summarize it, basically it says, if price stays in a range, because this is short the BTC squared perp, and it's long 2 BTC perp, to hedge the directional exposure, meaning you're not taking a view on the direction price goes, you're taking a view on the amount of the rate of change at which price moves.
Right, and so you're winning as long as the price movements aren't crazy.
Yeah, so you're winning if implied volatility ends up higher than realized volatility.
Yeah, and so with for everybody, I was kind of looking at this and then a little bit of that, but going down here to break this down within these, how do these go ahead and show where the money was made. I see the premium, I see the return.
So you can think about this as since the position is short BTC squared, it's always collecting funding, because the funding rate is positive consistently on this place, right? As it should be, because we were talking about earlier, it's a square term, right? So you're collecting funding by staying in this position, and every time it trades, it's trading and collecting. Every time the auction happens to trade this asset, it's getting a price, and that price can be converted into a premium, and you can think about that as the profit you're generating, the yield you're generating in that window, and then that's the beginning of the window, and then the return is at the end of the window based on how much price is moved. What are the net return that you're collecting as a user, adjusted for fees and everything?
So if you put in, I'm seeing if you put in, or the entire thing put in was 10,280, and the final return was 8,622, or am I reading that wrong?
Yeah, so the amount deposited is in the third column, so the 888,000.
Okay.
And the premium, so the return collected as the epoch started, we'll just call it yield for now, as the epoch started, was that 10,280. And then once the epoch ended, the strategy was still in the range, so the P&L was positive. But since there's a performance fee, it's now, instead of 1.16%, it's around 1%.
Which is indicated by this 97 here, though.
Exactly, yeah. And this generated about 1% in that week,
right? So
which you can annualize.
And if we look here, this is a week that it didn't.
Yeah,
it was down.
We'll clip that.
Right.
Okay. Cool. I think
exactly.
So
that's a great breakdown
I have a question about I guess going forward with Friktion, and kind of like how you guys are going like with other chains like Ethereum and whatnot. So I know that there is like you can put Ethereum into a vault. I forget. I know there's one for the covered call, right? And Avalanche, yeah. So are those like, how when you
Avalanche
swap, like you can exchange for a Ethereum token, but it's on the Solana blockchain. So what exactly like would be is it more beneficial to put Ethereum into a vault that's on the Ethereum blockchain, or is it more, or does it matter if you use Ethereum that's on Solana?
Yeah. So I mean, as an asset, these things are quite fungible. Like the one thing to remember, though, to answer your question is, I think you were referring to the idea that we recently enabled cross-chain deposits. So what that means is that you can deposit your Ethereum natively from the Ethereum blockchain. So let's say use MetaMask as your wallet there, into Friktion using a bridge. So a bridge is what allows you to transfer an asset from one blockchain to another blockchain. You can kind of think as like an advanced bridge has some sort of kind of generic messaging system in which it allows you to say like one Ethereum sent to the bridge. Let's say you use Portal Bridge, which is by Wormhole, or All Bridge, to transfer assets across from Ethereum to Solana. You get that asset on Ethereum. The bridge has an IOU of sorts, and then the bridge issues you one SPL token that represents Wormhole wrapped ETH. And that token, now you can move back to Ethereum at any point natively. But basically what the integration we did was enable you to bridge any of these large layer 1 blockchain assets like Ethereum or Avalanche from their blockchain directly into Solana and into the Friktion strategies. So that was the kind of goal behind that, because we think like at the end of the day, there's a lot of benefits of doing this on Solana and a lot of benefits of doing this with Friktion. Generally, buying options in DeFi is a pretty tricky endeavor because it's not very liquid. Because it requires market makers take a lot of edge in order to show a quote for an option, much harder than it is to show in a place like Robinhood, where buying options very popular. So we want to offer a principal protected long volatility strategy, and by that what I mean is the asset, the amount, the value of the asset you deposit, or the principal that you deposit, the value can't go below that value when you deposit it. For example, let's say you deposit USDC into the strategy. What it's going to do is it's going to lend out that USDC through an over-collateralized, optimized lending platforms. So you can think like SolLend, SolFarm, or Tulip, Port, Jet, Mango on Solana. So the compound and Aves of Solana. And it uses that interest. So again, it's lending. So it's a debt instrument. And it's using that interest to buy options. And what this does is it lets you participate in upside or downside. So if market's moving up a bunch, you can earn you can get that upside participation that you would have wanted without risking your principal. This is our first properly principal protected product, which you can choose based off of what asset you want to deposit. So you can deposit USDC, you can deposit Sol, you can deposit BTC or ETH eventually. And essentially this lets you participate in being long volatility. And that's something we think is super powerful for DeFi because so far we haven't been able to crack that.
Right. And so when you're saying long volatility, you mean that you win as long as there is a good amount of volatility in the market, up or down, right?
Yeah. So there's different versions of the strategy. So there's a version where you can participate in the upside and by buying calls or buying a positive delta instrument and positive vega instrument. And then there's others where you can kind of buy puts, still positive vega, but they give you access to monetize vol when it does happen, while your principals is protected from the kind of loss in the form of the carry is never going to be negative on your principal amount.
Right. And so is that both vaults 5 and 6, or is that vault 5?
So that's just vault 5. It has a couple of elements to it that we're going to be publishing about.
That's amazing, man. You guys do the most. Just saying, like you really are an inspiration, man. How long have you guys been working on stuff like this? How big is this team?
Thank you, man. Yeah, I appreciate that. I mean, we're about 8-9 people now. So when we launched, we were three people when we launched, and we've kind of grown the team out a little bit. Really lean, trying to bring on some really high quality engineers, kind of traders, researchers, and a lot of us come from the trading background. So we've always wanted to build products that are optimized and give people access to the strategies that normally you would not really have unless you run a hedge fund or kind of manage large institutional capital.
Right. And thank you for clarifying that up. Sorry I took you away from the main point, but you're going to tell us about the 6 volt.
Oh yeah, no problem, no worries at all. So the 6 volt is pretty interesting. It's our first stab at kind of fixed income. And to clarify, I mean, maybe you guys can throw in like a guide for the users and kind of explain what fixed income is. But simplest way to think about it is it's a credit market, right? So when you borrow to buy a house, when you borrow cash, you see some APR for a 30-year mortgage. And on the other side of that is someone lending you that capital, right? So simply a money market is just a presence of a lender and a borrower, and someone to bring the lender and the borrower together. So what this means is you can use a platform where, like Compound, which is a really popular DeFi lending platform, where a user can deposit assets into the platform, and someone can borrow against those assets on the platform. And that same user can borrow against those assets because the requirements of these platforms are that they're over collateralized, meaning the borrower has to deposit more money than they are borrowing to be able to access that leverage. So yeah, Solana's a good example.
Yeah. So in terms of like Solana, the AP, like this says borrow APY, and then it says 175.96%. So like I could see why that would make people think like, oh wow, this is gonna make me thousands of dollars or something. What does that actually mean, that APY right there?
Yep. So technically, like borrow rates should generally be represented as APRs, because it's not compounding, which is one. Yeah, there you go. Oh, even that's nice they have that. So essentially, that's saying that's the annual percentage rate that you're paying to borrow. So SLND, which is their native token, and this is you're paying that as a borrower. But if you go over to the supply rate, you can see that lenders are receiving 14.4% from lending SLND, some token, into the pool. So it might be easier to think about if we look at like an asset like USDC, because it's kind of it's cool how things like that work. So if you look at the supply rate, there you go. Yeah, the supply 3.4. So you get 3.4% for lending into this pool. Right now, there's about 100 million USDC deposited in there. And of that 100 million, there's about 61 million that's being borrowed. So you can see that this pool has a max loan to value of 70 LTV of 75%. So as they use a very interesting set of equations, you kind of think of them as like variable interest rate curves. So maybe that's a cool image to throw in as well onto the screen. But essentially, it says like there's a function by which, as your utilization, so as more people are borrowing and the supply amount staying the same, as that tightens and there's not a lot of available capital in the pool, the rates to deposit and to borrow go up, but there's a certain inflection point, usually around 80%, once you start to see the rates skyrocket, because it needs to incentivize people to deposit into these pools.
And so when we look at this on the dashboard, the USDC, this USDC is like you're lending and borrowing, like that's USDC strictly. That's kind of what's going down here. But then when we go over to the pools, like a liquidity pool, how like for Solana and USDC right here, like what's the?
Do you click on that? Essentially, so the one you were looking at earlier is just what they call the main pool. So it's just one pool of capital where the parameters or these interest rate curves and the general parameters of the money market or the pool are defined very uniquely for each pool. So some pools only permit certain assets to be deposited or to be lent or borrowed, right? This one is just SOL and USDC. But if you notice, this allows you to leverage up to 10x on your SOL, while the other pool may not allow you to get that much leverage. And obviously all of this comes at a cost, right? So if you're taking on a lot of leverage, then you're risking a liquidation, which means you think about like a margin call. So if you are over levered and the price moves against you, you can get liquidated, meaning your deposit can start to get drained.
When it gets liquidated, or
I think there's usually if you click on it, it might tell you on the modal under more parameters. Go down. So if you hover over a liquidation threshold, that little info box. So once you get to 95% collateralization ratio, the liquidation can start to occur. And liquidations are run in a pretty interesting decentralized way where bots are coming in and catching that this pool is very close to getting liquidated, and they're showing up to try to kind of arbitrage this and earn a fee from this liquidation. As you can see, there's a penalty on there, which is earned by, I believe is earned by the liquidator.
That's crazy. What are your thoughts on that? What are your thoughts on like bots? Like there's so many bots now on like just NFTs, crypto market in general. Like, how do you think in the future people are going to be able to prevent that from how do you guys prevent bots from messing with your vaults?
Yeah, I mean, I think one big thing that's really important to us is just security. So making sure the protocol is audited, battle tested, and reliable. I mean, we've been audited. The first two vaults have been fully audited by Collateralized Security, which is a blockchain security firm. And I think one big thing is like we want to test all these edge cases and see what could break, and if there are vulnerabilities, resolve them as soon as we can. I mean, I think there's many different types of bots. I would say like liquidation, arbitrage, and market making bots are pretty healthy for the market. But things like NFT spam minting bots, pretty unhealthy. I mean, they cause issues in the Solana network, as we were talking a little bit about earlier, and they tend to not be super productive for that ecosystem. But running a liquidation bot is important because that's what ensures the integrity of the lending platform, the borrowing platform, is that at some point, if the price moves against you and you're borrowing with a lot of leverage, you should get liquidated.
And so people know, you guys, after you guys were, had the security thing done, there was no findings of any critical or high severity, right?
Yeah. Yep. We were fortunate to have did a lot of work. Engineering team is really great. We've been working through a bunch of really exciting products too. So it's great to see that there was no critical or high risk vulnerabilities identified.
How did you go about getting, your core team members together? Because I believe you go by Leonardo in your Discord, right?
Yeah, in the Discord. I'm Leonardo. Actually, Leonardo also whose real name is Leonardo, just joined our team as a front-end engineer.
Sweet.
But three of us were friends from college, and then we met one of our team, Jason, who runs front-end engineering, co-founder. We met him through Discord, really, which is pretty cool. So we started talking on Discord, realized that he was working at a couple of banks before as a software engineer, and realized that he wanted to go full-time into DeFi. He'd been kind of an NFT degen before this. But I think, we were fortunate to like reconnect with some friends from college who I worked with and had done stuff with before. And since then kind of been expanding the team, always looking for great kind of Rust or backend engineers as well as front-end engineers. and people who think they can help kind of bring in new users into DeFi and the growth marketing side.
I love how your attitude towards like just DeFi, like you want more people in. It's not like, hey, you're not one of those people that is like, trying to make sure that people, don't get in because you want to make all this money or like buy a bunch of shit before. Yeah. So I really like that. It's good leadership.
Yeah. I mean, our goal is to get like billions of people in here. Right. And I don't think it's not going to be easy. I mean, it's hard for most people to onboard into DeFi in the first place. Right. But I think in 5 years, things will be a lot different.
Why would you say 5 years? I mean, maybe 5 years is an arbitrary number, but I guess I was going to lead into my next question anyways. But the long term for crypto, you see it hanging around and doing well?
Yeah, so I think crypto is such a broad kind of thing to look at. I think there's parts of crypto like DeFi, for example, that I think are really providing like productive sources of like risk taking into the world, right? And I think these are things that you traditionally need a bunch of intermediaries, middlemen, institutions to be able to access. And I think just that the power of DeFi won't get any smaller over the next couple of years. I mean, we've innovated things. We haven't innovated anything super exciting in like the last year in DeFi, which is time to start building products that can really like take off and get people's attention, and new innovations like the automated market maker, which I mean that just like to some extent the Uniswap V2 is what got liquidity to, or just generally constant product market makers are what got liquidity to a lot of altcoins, and created the funnel in which a lot of people can onboard by LPing. But I think 5 years is kind of arbitrary, as you're saying. To me, it's all about just finding new ways for user adoption and user onboarding to be easy. And I think in 5 years, I'm quite confident. I mean, I would love for this to happen in less than a year. But I think it takes a lot of like things like this, talking to new prospective users, educating people, and getting them into the community.
And that's a big ROI right there, I'd say.
I'm bullish on Friktion for sure. Would you guys ever come out with like a token for any reason?
Yeah, so we haven't dropped all the details on that yet. But yeah, we definitely think that the kind of token economic model of DeFi is really powerful. And I think that's a great way to incentivize the community, but also create like a really good product that doesn't just rely on token emissions. I mean, from the start, we've said like we don't want token emissions to be the source of yield. And if that doesn't make sense, check out some of our documentation which talks about it. But I think like a governance token is quite useful. There's various forms of token structuring as well to kind of make smarter decisions as a community in a decentralized way.
We'll post the docs in the description below so that people can have that access.
Oh, dope.
Mm-hmm. And you guys are a DAO,
Thanks,
so the governance token makes sense, like for people that don't know.
So yeah, we're on the process of getting there. I mean, decentralization is really challenging. It's a long kind of process where you want to make sure you're safely hitting these milestones and kind of getting where you want to go in the right amount of time in terms of decentralizing the network, and having this run by it owns the community essentially, or the governance participants. So we're on the path there. I think have a lot of work to do as we get ready for that, though.
I bet. I mean, geez, I feel like I'm wasting your time. I feel like you should be working right now.
I feel I
mean this is work. I mean this is
he is working.
Yeah, I'm getting to talk to you guys, which is dope. I think a lot of the stuff you're bringing in, like the type of users you're bringing in, aren't users that we normally talk to DeFi about. I mean, I would love to learn more about the type of users that you guys are seeing coming into DeFi and what we can do, because we're launching this thing called Friktion Learn pretty soon, which is kind of like a DeFi academy or a course of sorts. So you go from like 0 to 1 in terms of DeFi education through the articles, the classes, the quizzes type thing, and you'd be incentivized to do that too. So we definitely have like an NFT program that's going to come out of that as well.
Dang.
Oh, that's sick. Our community will love that.
Yeah. And it sounds like an incentive to get people involved in the learning process of this stuff. That's what we really need in all that. And that's kind of what the podcast is really favored around. So I could, oh man.
Dude, we should get y'all involved in that. I mean, it's going to be really exciting. Yeah.
Hell yeah. Well, this has been a great episode. We've learned so much. You literally taught us. I felt like I was being one-on-one taught by a master.
Thank you.
Thank you, Jose.